What's up everyone, my name is Joris. If you want to be financially free, you'll have to know how to manage your money. As you might know, I am an investment advisor. Back when I worked at a major bank, I had several occasions where clients had come to me for their loans. One of these clients' case will always stick with me. This particular person wanted to take out a loan to fix their roof, which has been damaged over the years, and it needed quick and urgent repairs. They did not need a lot of money, it was only about 10,000 euros. But they had no savings whatsoever and they had to take out a loan for the whole sum. The bank loves these customers. They really need the money and they will have to pay quite the steep interest rates on their loans. This person got a loan of 10,000 euros with an interest rate of 8%, since we were not able to categorize the loan into a renovation loan or something cheaper. After 5 years, they have paid off their loan, the 10,000 euros principal, but also 2,000 euros on interest. If this person had just saved up money for this expense they knew that was coming, they had not had to take such an expensive loan. Money management or personal finance is one of the most important skills you could learn nowadays. Unfortunately, our schooling system does not teach us these skills. So you will have to learn it somewhere else. For example, on my channel. By liking this video and subscribing to the channel, you'll be notified when I post more educational videos about personal finance. Due to the recent global pandemic events, millions of people are being laid off from their work. This will be disastrous for those people who already had it hard. They already had problems with saving. Here are some findings of Career Builder, who did a survey a few years on the American consumer market. Nearly 1 in 10 workers making over $100,000 a year live paycheck to paycheck, and even more than 1 in 4 does not save at all. Last year, CBS News also notes that almost 40% of Americans are not able to cover an unexpected $400 expense, like a broken down washing machine. We Europeans may say, well, but that's just America, things work differently here. Well, even in Belgium, a country that is also considered one of the richest in the world, there is a lot of poverty. A study of the TED shows us that around 1 in 5 Belgians are also struggling to pay their monthly bills. Their survey asked people how easily they could spend money on everyday expenses like rent, heating, TV, washing your clothes, or a yearly vacation. They concluded that 1 in 5 is actually struggling with these payments or even fails to pay them monthly. The same goes for unexpected expenses. Almost 1 in 4 Belgians cannot pay for an unexpected expense of 1,100 euros or more. Again, like a broken down washing machine. Also, 1 in 4 Belgians cannot go on a yearly vacation due to financial struggles. Even around 5% of Belgians cannot pay their monthly bills of rent, electricity and other utilities whatsoever. But, and this worries me quite a lot, the surveyed people told the researchers that buying a new phone or a new TV is no problem. The numbers we just addressed tell us what I already expected. A lot of people have poor or no money management skills. They fail to see what is important financially and they consider status to be extremely important in their lives. If you think that buying a new phone or a new TV is more important than paying your rent, there is a big problem here. People need to learn the differences between assets and liabilities. Both are your possessions, but there is a big difference between the two. Assets, on the one hand, make or save you money, while liabilities cost you money. Let's do a quick quiz. Try to decide which of the following is an asset and which of the following is a liability. Your own home, a new car, a rental property, stocks and bonds, a new TV, and a credit to go on a holiday. Some of them are very easy. A rental property, stocks and bonds, well, they are assets. They make you money over time. Some consider your own home, the one you live in, with a mortgage on it, to be a liability. But personally, I think it's not. Since interest rates are very low, you don't have to pay a lot of interests at all. Most of your mortgage payment goes directly towards the equity in your house, and thus you are saving. And meanwhile, the cost of living in your own home is comparable with renting. That is, if you do it right. Look at the video right here. So paying off your mortgage is saving in equity on the one hand and not spending rental expenses on the other hand. A brand new TV and taking out a loan for a holiday are obviously liabilities. You do not need them. And if you can't pay for them quite outright, quite frankly, you should not even get them. A new car is also a liability, despite what many people think. It depreciates very fast and it will cost you money on gas, insurances and so on. If you get a used car, on the other hand, it is possible to sell it after a few years at the same price or maybe a bit lower. And if you use your car for work and make your company pay for it or for part of it, a car can actually be an asset, as long as it makes you money or it saves you money. It is important to decide what the assets are in your life and how you can invest in them. It's equally important to limit your liabilities, to make sure that they do not even cost you more money, or better yet, turn your liabilities into assets. In the next videos, we will look at how to spot these assets, how to attract new ones, and how to save our money wisely. So you'll never have to take out a loan for a holiday again. If you like this video and you want to see more about personal finances, consider subscribing. You'll be notified when a new video is posted. And if you want me to talk about a certain subject you're interested in, let me know in the comments below. Keep doing what you're doing, and I'll see you in the next one.